Welcome everyone. My name is Greg Diamond, and this is Diamond Edge Live. And have an exciting show. Obviously, there's a lot to talk about, a lot of charts to talk about. I'm sure you guys have a lot of questions. So there's going to be a lot to discuss. I'm going to look at some long-term charts, some long-term setups that I think are very, very important for both investors and traders to know. And then we'll dial down into the short-term stuff. We'll also look at some individual names, a lot of the Mag 7 names. We'll look at transports. I haven't looked at that in a long, long time. And I'll discuss a thesis. I have a fundamental thesis of what's going to happen with the trade war. Okay. First, let me share my screen here. And this is a chart of the S&P 500, a weekly chart going all the way back to 2017, 2018. And this is basically just simple channel, long-term channel technical analysis. The upper band here, okay, in black, the lower band down here in black as well. You can see, okay, we get resistance and support. All right, great. So what are we looking at? Well, what I outlined to 10 Stock Trader subscribers on Monday, okay, is look at where the S&P 500 on this. Now this is a weekly time frame, right? So it, each bar is a week, but we stopped right at this lower support level, going all the way back to 2020. Okay, this is the COVID lows, and you can see in here in 2022, it stopped. 2023, the October 27th, 2023 low, that held this, okay, and then we just held it again. Seems very simple, but this support matters, okay? It matters in the long term. Long-term asset managers are looking at this, okay? We'll look at it too. And look, the S&P responded. Let's also look here, this long horizontal black line. This is the 50%. I'll zoom in here, 50% Fibonacci retracement from that low, okay, in 2022, all the way up to the recent high. It stopped right at the 50% Fibonacci retracement level. Now, could we drop a little bit lower? Yes, but we have multiple things telling us that this is major long-term support. We can also look at the relative strength index down here, extremely oversold, especially on a weekly time frame. And if we go back in time, we can see it hasn't been this oversold since March of 2020. All right. We can also go back and look at the composite index. It's showing me the same thing. So does this mean that we're just that this is the low and we're gonna, simply rally from here? Not necessarily. Okay. I've been talking about the last couple of weeks, what the worst case scenario was. Obviously, we're in that worst case scenario about how the end of April is likely to be the most important time frame for the entire year. And that looks shaping up to be the case, okay? We have earnings starting with financials this Friday, all right? We could see some choppiness. I'll get into the choppiness in a second, all right? I also want to show you this. So I often like to tell people, everybody likes to look at the S&P, everybody likes to look at the Dow, the NASDAQ, I get that. It's very important, but you also have to look at other markets, other sectors, okay? Sometimes other charts are giving you another signal. Now you can see this red line here. This is the weekly 200 moving average, okay? So this is a chart of XLK, same weekly chart, or weekly time frame rather, okay? And XLK is simply the spider technology sector. It tracks the NASDAQ Composite Index, NASDAQ 100, similar to those, okay? Look at so this is a 200 week moving average on this chart. And that just hit this week, this low. All right, let's go back in history and look. It tagged on in January, beginning of 2023. Okay, back in October of 2022, it nearly hit back in COVID, and then again down in 2018. Speaking of 2018, I think, and this is something to keep in mind. So when Trump was elected, and then in his first term, he started talking tariffs in October. And I'll zoom in on this, all right? We had this big drop, right, where he started a trade war, particularly with China. And that was from October 4th, October 5th, and it lasted into the end of December. So let's call it 3 months. October, November, December. Well, what did he do this time around? It started in February, March, April. We're looking at a similar, I'm not saying it's going to be exactly the same, but if history is somewhat repeating, or rhymes as some people like to say, okay, could we be looking at a 3-month low? We also look at time frames sometimes in a 3-week or 3-month or 3-year cycle depending on a high or low. It's just something to keep in mind. I just found that very interesting in terms of how the tariff situation is working, worked back then as it is now. And again, we're finding ourselves in support. All right, so that's the long term that I'm looking at, right? We have this Fibonacci retracement of 50% coming into play, long-term support levels. We have the 200-week moving average coming into play, extremely oversold. This is on the long term. All right, now let's look at the short term. And this is again with the S&P 500 and something that I outlined to 10 Stock Trader subscribers over the last couple of days. And what I want to highlight here is this is the correction that is coming to an end. Again, could we trade lower into the end of April? Sure. All right. But how is that going to happen? It might not necessarily be this straight move down. We saw the volatility start this week. We saw the huge low on Monday. We saw the huge rally yesterday. We're seeing mixed results today. Okay, the futures overnight. I was telling the guys before I hopped on, I'm going on about 3 hours of sleep and about 10 espressos. But because I want to see how this all shakes out. I want to see what happens with China overnight. I want to see how the futures are reacting. I want to see what's happening in interest rates. So it's important to follow that. Okay. Now, one of the short-term setups that I have heading into the end of April, okay, is this right here. And essentially, in black, this is just one big correction. So if you go back to 2018, the 3-month correction, it's the same thing, similar, okay? We had this A, B, and now we're on this C wave here into the end. And then this is where I have this tricky wave 4, okay? So let's say today marks a short-term low. We could rally into, let's say Friday or into early next week with bank earnings. There's more tariff headlines. Who knows what happens? But then we get this final 5th wave low into that April low. That could mark, and whether we make a new low or what's called a truncated low, where the 5th wave doesn't actually make a new low below April 7th, that's totally something that could happen. That might be the likely scenario. The other scenario is that we have a situation where this is already in play, okay? So this wave 4 was complete as of yesterday, all right? And then, maybe we get a wave 5 down into the end of this week or, early next week, okay? Then we rally, and then we make a higher low into late April. So it'll look something like this, okay? Maybe we get a drop, a pop, and then we have that higher low, so from Friday and Monday, okay, and then we just simply take off, okay. That and again, this would line up almost perfectly with what happened back in 2018. Let me go back to that. I think that's important because we can see a similar setup. Now, so we can see here we had this A, B, C. It's a very similar pattern to what we're seeing right now, okay. Little deeper, right? We have more tariffs, higher tariffs. It's global, okay. But the situation is nearly the same in terms of the time pattern that we're seeing and the price pattern that we're seeing, and then we combine that with some of the cycle work that I've talked about. Some of these scenarios. This is shaking out to be, to me, a historic buying opportunity, okay. But this is going to take some patience. It's not going to be just tap and go and then we're off. But the long-term support levels are there, the short-term support levels are there, the setup is there, the timing is there for me to start getting bullish. All right, let me take a look at, let's see here. Oh, the transports. Let's look at the transports. This is something I haven't touched on in a long time. And what I want to show you here is look at how the transports, and I'll delete some of this stuff. You don't need to see this, it's all. I'll just move this out of the way. All right, so transports topped in 2021. It dropped, but it just never could, keep pace with what was happening in the NASDAQ and many of the other sectors. But now it's starting to bottom out. Look at this extreme oversold level on the transports. Again, we haven't seen this since 2020. All right, we actually look at similar to what I outlined with the XLK. I like to look at various tickers, all right, within different sectors. So we can look at the transports, the Dow Jones transports, and this is XTN, the Spider transports, okay? It just made a new swing low below that 2022 low. So could this be a situation where we finally seen the transports actually make a move that makes sense to where, hey, everything's starting to bottom out now, and now we have this rally. Well, what would that mean with tariffs? What would that mean with the economy? It could mean that transportation sectors are going to come back. We have trillions of dollars of investments coming back. You know, I'll get into the tariff situation, at least from a fundamental perspective, at the end. But I think this is a very, very important chart to look at. A stock to look within the transports is one of my favorites to trade is FedEx. Okay, this is getting to extreme oversold levels. Okay, so this is something to watch over the next few weeks. So I think I'm going to be talking about transports more in the future, but that's something that I haven't highlighted in a really long time, probably a year or more, but it's something that I want to highlight today. Okay, now let's look at some of the individual stocks. And I mentioned to 10 Stock Trader subscribers that the individual names tend to bottom before the major indices. They tend to. Okay, so let's look at Amazon. All right, and I'll do some of the Mag 7 stuff here. All right, so we can see that Amazon had a big correction. Okay, now look at this low that we made on Monday. Okay, and you can see today it's you know, yeah, we had this huge move yesterday. The futures markets actually traded much lower into that Monday's low. Amazon didn't. All right, let's take a look and see how it trades over the next few days. Despite the S&P or the Dow or the Nasdaq making a new low and Amazon doesn't, that's one to keep in mind. Okay, here's Apple. Apple had a big move down. It's rallying back today. All right. On a long-term chart, again, all these things are just shaking out with this extreme oversold conditions, okay? So, you know, this is a weekly chart, all right? Yeah, maybe it trades back down below this swing low and support around 165, but then you are just getting into more oversold conditions, okay? Another one is Google. And Google has a similar setup to Amazon. All right, we traded below this low. All right, and so what I'm looking at here is kind of similar to the S&P in terms of a wave count. Let me show you what I see there. Right, so this could be 1, 2, 3. We get this 4. We get this 5 into the end of earnings, and then boom, that's it. We rally. Okay, and you know when you see a stock like this that has made a swing low, all right, and you're in this oversold conditions, you know, that could take the rest of the market higher as well. All right, we can look at NVIDIA, okay, the semiconductor sector. And again, this is kind of similar to what I outlined in Amazon. It had this huge low on the 7th, right? And it's not trading as bad today as some of the other sectors, at least definitely not with futures, okay? So let's keep an eye on NVIDIA in terms of making that higher low. Again, whether that's into the end of the month or not, you know, that sets up what's known as positive divergence, and that is the single stock names have positive divergence. They make a higher low relative to the S&P or the indices, okay? AMD, this is one we traded this for 35% gain just in a day based on some of these wild swings we're seeing. Now, AMD is in a weaker position than NVIDIA, okay? But let me show you this count, and this is just from that recent swing high that we've seen, you know, after the tariff was announced, okay? So 1, 2, 3, you know, maybe we get a pop 4, we get a 5 down into earnings, that's it, we rally. So those are some of the, those are the short-term setups that I'm looking at, those are the long-term setups that I'm looking at, okay? And I think it's important to know, you know, what's happening with China. We have, you know, 104% tariffs, we have 84% tariffs. So I think one of the theses that people are, that I've come to the conclusion of, and this may be wrong, but I think this is something to think about in terms of the positive side of what's going to happen. Now, let's say China digs in, they say they're going to fight to the end, okay? Fair enough. Now, 70 other countries or 100 other countries or 50, whatever the number is, it doesn't matter, okay? What we've seen is that they've all come to the table and said, hey, we want to make a deal of some sort. So is China putting themselves in a box? We've heard rumors, I don't know if it's true, but even if it's just a little bit true, that Apple might move $70 billion, okay, out of China and into India to avoid the tariffs. That's a lot. How many other countries, Vietnam, Korea, Malaysia, Cambodia, you go down the list, the apparel companies, Nike, everybody who has, you know, whether it's plants, labor, produce, supplies, whatever it might be that's produced in China, okay, how many of those other countries are willing to step in and say, hey, I'll take that business? A lot of them. And if those are zero tariffs or reciprocal tariffs that were 50% and now they're both down to 20, that is going to be a monumental shift where China is actually putting themselves on an island basically and saying, you know what, we're just going to dig in for whatever reason, and other people are going to get into the mix. And it reminds me, as soon as I saw what was happening with China, it reminded me of a story when I was the head trader and portfolio manager for a large pension fund. It was a $65 billion fund, and I'll be real quick with this, but when I first got there, they had two brokers, two banks. I'm not going to name names. And the rates that they were charging were out of control. It was just ridiculous. So I came in and said, listen guys, this is out of control. We're going to be trading a lot more. We're going to be active. So I went out to all of Wall Street and I said, I'm Greg, I'm at this pension fund. I went out to, let's say 15 banks. And I said, I want your best rates for commissions for the trading that we're going to be doing. All of them came back with something except the two, okay? And because they are arrogant, and again, I'm not going to name the name of the banks, some of you might be able to guess, they thought of who they were that they could actually charge higher rates. And I said, no, I'm not going to, why would I do that? Just because of who you are? I don't care. I'm getting the same service for a cheaper rate. This is what I'm going to do. And I never did business with those people again. And the commission rate that we negotiated, we saved the fund millions of dollars in commissions. That's exactly, again, it's a microcosm. It's a very smaller scale, but I think that's what we're seeing with what's happening with China, with the tariff situation, and then what's happening with the rest of the countries who are willing to come to the table. So I think that is the optimistic outlook for what could happen with the tariff situation. Yeah, maybe China never backs down. It might be their detriment. Those are the charts that I have. That's the fundamental thesis as well that I have. But I think there's important long-term charts, short-term charts to understand the setups, exactly what I'm looking for, heading into over the next 2 or 3 weeks. I think it's going to be absolutely critical. I'm happy to take any questions that you guys have. What is the best hedge to use in case of further declines? Yeah, that's a great question. I don't like to trade the VIX, but in this situation where we've seen such huge volatility, the VIX or the VXY ETF, let me just show you. So, you can trade this VXX. There's a lot of, there's tons of different volatility ETFs based on the VIX that you can trade. You can buy call options there if there is going to be more downside. So that's definitely something that you can look at. How long will the trade war last? That's a really good question. Is it going to be over like it was back in 2018 where we saw, 3 months and then it was done? Now the only difference there was the Federal Reserve stepped in and started cutting interest rates. Are we going to see that again? I don't know. So I think that it's going to be important to think, all right, again, kind of what I outlined with China and the rest of the world. Are they going to be there and that trade war lasts forever? Will we continue to see this back and forth, but other countries come to the table and say, hey, we're willing to negotiate? Is this a good opportunity to buy drip stocks? Drip stocks. So I can't tell you exactly what to do in terms of some of this stuff, but this is oil and gas and stuff like that. This is something where that's where you'll have to make a decision. You can see how crazy this has been. How this all works out with energy, I'm not so sure. But just use stops if you do. Is this a good time to buy 10-year treasuries? That's a good question. So what's happening right now in the treasury market is very interesting because we're seeing interest rates rise. We're seeing there's two theories. Number one, China is selling the U.S. treasuries, and then the other is that there's a hedge funds blowing up because of a basis trade. What is a basis trade? A basis trade is where hedge funds will look at the cash treasury market and the futures market and then trade that spread. And when the spread gets too wide, they blow up. So we just don't know yet what's going to happen in terms of that trade. But what we can say is that we have to see what the Federal Reserve is going to do with Treasuries. So I'm not saying buy them yet. It's something that I'm looking at. Are there? Let's see here. We just got some big news. We're actually spiking up here. Give me 1 second, guys. Let's see what happened here. I'm not seeing any news just yet, but we're up 5%, 6%. Anyway, we're moving here, so this could be part of this fourth wave that we're looking at. You can see here we're spiking. If anybody has any news on it, I'm answering questions, but we can see we're spiking here. So let's see how this works out. Okay, back to the questions. Are there lessons from the '08 crash that apply today? I don't think so, because that was a financial crisis of speculation. That was a financial crisis of bad loans, of fraud. Okay, this is economic news driven, and the market's figuring out, okay, what's the new normal? What is the new normal going to be? So I think there's a difference there. I don't think this is a financial or speculative crisis. This is a news-driven, economic change-driven correction. Again, I think it's a correction. Okay, let's look at, what do you think of Tesla and its links to China? Yeah, that's going to be an interesting question, because they have a lot of links there. Are they going to do a situation with Apple where they move their factories out? I don't know. I think that's something, obviously, Elon Musk is probably thinking pretty hard about right now, if he hasn't already before this whole thing started. When does a correction become a crash? This is a great question. So I think that if we get through the end of April, and let's give ourselves a little time. Let's say the first week of May. If we're not up and rallying, if we're not rip-roaring at the end of the first week of May, then I would be concerned based on time alone, but also this corrective move that I just highlighted. But again, you can see, here's the 1 minute day. We're ripping here. So Dow's up. I mean, NASDAQ is up 6%. SMH is up 8%. So we're moving, okay? So again, this doesn't have the look of a crash to me. This has the look of a volatile correction for sure. Is gold a long-term hedge or sell now? Gold is a complete mess along with silver. Let me highlight silver first, okay? And so we had silver crash. Here we go. Silver crashed and hasn't rallied back. And then gold crashed, but is actually ripping higher. Okay, so you're probably going to be wanting gold rather than silver. Yeah, gold's a great hedge on uncertainty, and there's certainly plenty of that. Market reaction to 90-day pause on tariffs. Is that what hit the news? Maybe. I guess it's not fake news. I don't have my. I'm answering questions now, but that could be it. Let's see here. Do you think CAT looks like it bottomed? Yeah, Caterpillar is something that we traded on Monday, so it's rallying here. Again, this could be something where we, maybe fill this gap in those wave fours. Okay, let me zoom in here, wave four, and then drop again. But yeah, I would probably be buyer there. Was that actually a dead cat bounce the other day? Yeah, on Tuesday, yesterday. Again, that was the 90-day tariff. Maybe that just came back and some people are discussing it. I don't know. But that's something that we see all the time. But this is also part of the capitulation of a correction, and it goes into support. That's why it's important to look at the long-term charts, and then we rally. Has there been any sign in the market that manufacturing is actually starting to move back to the U.S.? I think that's what we'll find out with transports. We'll look at industrial. We'll see, we've been told that manufacturing jobs are coming back, that investment's coming back. Companies are building, Hyundai's building, NVIDIA's building, TSM's talking about. So there's plenty of things. We just have to see if that comes to fruition. 10 espressos. Do you recommend investing in coffee? Yeah, I definitely buy enough of it to where I would invest it. I wouldn't trade coffee futures. It's very, very difficult. but that's something that I definitely take part in. Tariffs were raised to 125% for China, and the market rallied. Interesting. Okay. So, look, we're going to have more of these headlines. This is going to be a wild ride, but I do believe, once we head into the next couple weeks, if we get any of that weakness, I've told 10 Stock Trader subscribers, if we get that weakness, we're buying. Okay. Quick note: there will be no show next week. Our next show will be the following week on the 23rd. All right. Thank you very much. Thank you very much, everyone. See you on the 23rd.